would show that banks have continued to contract availability of credit, consumers have continued to use less of it, and that would be one other data point that would continue to be supportive of current mortgage pricing and bond rates. So, yeah, it doesn't look like we're going to catch it. If I see it here, I'll stop where I'm at and let you know how that came out. That sometimes can be a mover. So we don't have anything left today. Now we go into tomorrow. We do get a 3-year note auction, and it is a short duration, so it really, along with other experts, believe that's going to go very well. There's been extremely good demand on the short end of the duration for the Treasury notes. And so we'd really expect that 3-year to go very well, meaning that if it goes well, it shouldn't really move rates at all because it's kind of expected to go well. If for some reason it does not, that's really the risk. If that does not go well, we could see mortgage pricing back up here a little bit, but we really kind of expect it to hold tight. Wednesday will be the mover. You get a little wholesale data in the morning. Shouldn't expect that to be a market mover, as we say. On these, it's not consumer related, and then it typically has a muted impact on the markets as a whole. But we'll get a data point there in the morning. Wouldn't worry about that one too much. But that at 1 o'clock on Wednesday, you'll definitely want to stay tuned for the results of the 10-year note auction. It's right in our swing zone. That one will be very important. And as it gets a little longer out the curve, that's also where the risk comes in. Will the investors continue to put their money to work at those low yields the further they go out on a 10-year commitment? So stay tuned for that. That'll be a big one. And, of course, we move into Thursday. The 30-year has been a little dicey. That's 1 o'clock on Thursday. The last several times it's auctioned off, I think the last time it was auctioned actually went pretty well. But the 2 times before that, it did not. And we had actually had some rate increases on those days. So I want to stay tuned for that. Before that, we get trade balance. That shouldn't be impactful. But 8:30 that morning, we will get the continued weekly job claims report. And it is expected that that's going to edge up slightly from last time. I didn't catch the commentary as to why, other than just it could be seasonal or not sure what they're expecting. But so if you see that number edge up, and let me try to find that data point for you. Let's see here. Yeah, so if it, as long as it's under 500K, we find. If the thing moves up closer to 500K or higher, I would expect, well, that actually would be positive, I'm sorry, for bonds. So if that, you see that higher than 465, that'll be positive for bonds. If it comes in much better, as was the case on Friday with the monthly employment report, you can see how fast that can unwind rate conditions pretty quickly. So stay tuned for that. That'll be important. And of course, we get that 30-year note auction. But really what everything's going to be building for, and these note auctions will definitely be impactful, is the retail sales data that we'll get 8:30, so an hour before markets open on Friday. So we'll get monthly retail sales. Very impactful. We'll also get consumer sentiment, the University of Michigan report, almost, what would that be, 9:55 Eastern, so markets will be open. But look for that retail sales report. It looks like holiday sales are coming in higher than last year, which was really expected, but they're not as high as I think many thought this would be much better than last year's comp. But they are higher, however, they are down per shopper, is what we're seeing so far. And they've been real mixed, and retail stocks have responded mixed as well. In general, you're seeing at a higher end not do as well, though I think Nordstrom did well. But for the most part, the lower end seemed to be doing well, but there was an anomaly there where they thought Costco would do well, and it did not. So it really is really mixed, and stay tuned. And that will be indeed a market mover on Friday. But in general, you know, we are at, if you've been following us for a while, we are now at levels on the mortgage-backed security prices and the Treasury yields where we tend to have some pretty tough resistance in terms of going much higher from here on mortgage rates, or much higher on yield on Treasuries. So if that continues to hold, as it has for the last 90 days, and as it's tested here on Friday and has backed off, it seems that, as an example, we use 350 on the 10-year. Seems like it's going to hold, and if it does, then that will continue to keep us in the range and keep us trading at current levels of mortgage pricing. The risk we have at this point would really be a stock market that would run away. That doesn't look like, at this point, most likely. It really continues to fail. We keep noting the S&P level of 1110 or 1113. Right now it's trading 1103. It just absolutely for weeks now has not been able to break 1110, 1113. If that's the case, that will also help keep a lid on mortgage pricing here too. So we'll kind of keep an eye on those two things. So with that in mind, we haven't changed our 2-month rate forecast, and we still think that we hold in the nice range that we're at right now, which really if 350 holds on the 10-year, we shouldn't really crest 5 at current risk spreads for mortgage backs. We shouldn't crest 5% on a 30-year as long as that holds, and it looks like it's the case today. We're trading at 344 on the 10-year. So stay tuned. The week, again, not jammed with data points, but the ones that we do have are impactful, so you'll want to stay close to those, and we, of course, will keep you posted. Those of you on the call that are not on perhaps the rate alert service, and you may be on just either the daily service or the 1-a-week service, consider upgrading. Contact Josh or myself today if you have any questions, but that will keep you posted with our email alerts through the day as the events unfold. And then for those of you that may not be accredited, it does include the rate advisory service, so just go to the link that Josh has there on the page and learn more about the benefits participating in that accreditation, as well as we're just launching the beta of our consumer and lead program, referral program. So if you're interested in leads from consumers that hit our website, definitely let us know, and we'll tell you what's going on with that. But we should have that officially launched. Well, officially, let's put it that way, at the first of the year. But certainly, we have leads going out even today. So let us know. All right. Well, that's what we've got. If you have any questions, I don't see anything in the queue for chat, so I think we're good. Have a great week. We like to keep these short and sweet. If you have any questions, please don't hesitate to call or email us. We'll respond as soon as we can. Thanks for joining, everybody. Have a great day.